Hello everyone and thanks for tuning in. I'm James Tetreault with your Southwest Ag Grain Market Update for the first day of summer and longest day of the year, June 21st, 2018. Well, if you haven't been paying attention lately to the grain markets, you will come to realize that it has been a very bearish market as of late. So bearish in fact that farmers near Dresden can actually see the bears appearing in their fields. Can't make this stuff up, folks, but let's just hope that those bears, both in the area and the market, don't stick around for their winter hibernations. So looking at the markets today, and we see grains are mixed as July soybeans are currently down 5 at 884, July corn sitting up 3 at 358, and July wheat's trading up 8 at 496. So the strategy from investors and farmers today seems to be let's take a wait and see approach, and whether the US or China threaten to add more tariffs on goods, or if everyone can come to an agreement before things get too out of hand. The tit-for-tat war on tariffs hasn't only affected the commodities as of late, but now are starting to affect the stock prices as well, and they're starting to feel the pressure of what could possibly come. This week, the July soybean futures have lost nearly 21 cents since Monday, when the US announced tariffs on $50 billion worth of Chinese goods and threatened to impose duties on another $200 billion worth of Chinese goods. However, that did not sit well with the Chinese, as the government vowed to impose levies on equal amount of US goods, which will likely include soybeans, a move that shows that the Chinese government is not afraid of a fight. So, as we plummet to our lowest prices in almost a decade, we need to be on the search for the positives out there in the marketplace. We've seen some bargain buying lately, and some end users fill their needs with investors who had bets on lower prices have bought back in, which could bring on additional support in the market. We also continue to have strong cash prices in the futures positions for both corn and wheat. And although 2019 and 2020 are a long ways away in some folks' mind, it's never too early to book a profit. Some numbers to keep in mind is we have $5.25 August corn FOB farm. We are also closing in on $5 dry corn FOB farm for harvest 2019 and a $5.10 for dry corn at harvest for 2020. And not only do we have some strong future values for corn, but wheat as well, as 2019 harvest wheat is sitting well above $6.50 and 2020 harvest wheat is at $7 picked up. So those are just some of the positives out there in the marketplace today. Another positive we can focus our attention to today is the lower Canadian dollar. We are sitting near our one-year low, thanks in part to lower oil prices, as the price of oil fell from news that crude exporters in OPEC appeared to be nearing a deal to increase production. U.S. crude prices are sitting close to the $65 a barrel today. Another uncertain outlook for trade is also putting pressure on our dollar, and since we are running a deficit here in Canada, if any of the recent trade talks or NAFTA renegotiations begin to disrupt the flow of capital coming into Canada, our currency could also suffer even more. To finish up, the market trades what it wants to trade, and today it looks like we are trading a 180 bushel corn crop, and as well as trade war fears. So until it begins to trade something different, the funds will continue to be short and the market will continue to be low. It'll be very much so a wait and see approach this summer, with the wait being when will the market lows be low enough to bring buyers back and fund money back into the picture, and how long will this crop continue to push the 80% good to excellent rating it currently holds. Time will tell, and I hope everyone can enjoy the first day of summer. This has been your Southwest Ag Grain Market Update. I'm James Tetreault. Be safe and keep the swag and egg.